Sunday the 12th of August. So let's have a look at the markets for the start of the week. 13th of August. This is a Bitcoin weekly chart. As you can see, we're in a bear trend. We all know that. Lower highs, lower lows. This is actually a lower low than this one. So we had a nice little bounce recently. We hit this trend line and reversed exactly as expected. I do like this market. It does chart very well. It's a shame it's such a wide spread. So we've been down to 6,000. That was one of my targets, and we've bounced to 6,400, which is where we were supposed to hold, and indeed we did. So the levels, yeah, they just work. 6,500, I should say, 6,500, 6,520, or whatever it was that I said. So outlook's negative. The only way that the bulls can get control of this now is if we were to break above this trend line, which is around 6,700. We've also got the 500-day moving average, which is around 66, just above 6,600, 6,615. So obviously 6600, 6700 is your resistance. Unless we can get above 6800, bulls are completely out of the game. And then we'll have to get above 6900 and get up to the 100-day moving average in the 7,300 area. We are oversold, but without a buy signal, I wouldn't even dream of trying along in this market. Dollar index. So the dollar index fooled me, really. These negative candles up here with the long upper wicks and the little red bodies, shooting stars I think they're called, signaled to me, especially with this double top, the market was going to turn lower, but it didn't. The 2 weeks before this last one, we had a little doji there, then we had a move up, and of course a nice big blue candle last week, which clearly shows, as we break through the previous highs, the 200-week moving average and the 100-week moving average, that bulls are ready for the next leg higher. This is very positive indeed. With the benefit of hindsight, you can see this sort of rising triangle here turned out to be bullish, even though it can usually be bearish. I'm quite surprised that this support level held, but support it did. Support it was. And of course we rocketed up, even after rejecting the initial attempt last week at 95.51. We turned lower, and I thought that was it. I thought we were going to come and break down here, but it fooled me. By Thursday we reversed higher, and of course Friday a big move up. So very clearly through 95.55, 95.60. There's just nothing to stop this market now. At least testing this trend line up around 97.00, and then we'll see what happens there. But on the longer term chart, it all looks pretty bullish anyway, getting a little bit overbought in the short term. But we stick to buying dips in this bull trend. The Aussie dollar has been in a bear trend against the US dollar all year. This proved just to be a consolidation of the bear trend over the last however many weeks, several weeks, 6 weeks I think, which was just above the 61.8% fib at 73.25. So we've now clearly broken through that. We broke through the previous low of 73.08, I think it was. 73.08, there you go. Which signals a move down. We got to 72.78, but the downside's obviously looking, looks like we're going to head to the downside this week as we hold below 7,300. Kiwi, the New Zealand dollar, had already broken down on Thursday on dovish Bank of New Zealand rate comments, saying they were going to hold rates on the lows for the next 2 years. So big move to the downside from that announcement on Thursday, early on Thursday. Outlook just looks negative. We've closed near the low of the week. There's no reason for this not to continue down to 65.50, 65.20 and lower. This just looks very, very weak indeed. If you're short, stick with it. It's the dollar that seems to be benefiting from the trade war worries rather than, and the problems with the Turkish lira, of course, rather than the yen. The yen is usually a bit of safe haven, but not really benefiting from that on Friday. I was expecting the market to go lower. We've broken this trend line here. We've broken the 23.6% fib at 11.13. So obviously that 11.15, 11.25 area has been resistance and has worked really, really well. 11.16 the high on Friday and 111.18 the high on Thursday. So if you've been selling it up there, the trades work well, but not as well as I had thought it would do. I thought we really would be heading significantly lower, and although we got to 110.48, we saw a strong bounce, so didn't really expect that to happen. The 500-day moving average clearly offering the support, just as the 100-week moving average is offering the support here on this chart as well, so around the mid 110 area. I think that will give way eventually, and then we should head straight down to this support area down at 110.00, 109.90. This is going to be a good level. We've got some fibs going on there. We've got 200-day moving average, and by the time we get there, this 100-day moving average, which is now at 109.68, will certainly be a lot closer to 109.90. So there's a lot of reason to suspect good support there and probably a decent bounce on the first test at least. So it would be worth trying along on there, along on that support level when it's tested, if it's tested this week. Euro chart is fairly textbook really. We had all that support, resistance up around the 117.40, 117.50 area, which worked as a scalping level if you were trying that. Then eventually we broke down week before last rather. We actually broke through the lower trend line, hit 115.27, bounced to the trend line for the retest and the chance to get short. 116.20, 116.30 was our resistance there. So if you did sell it there, that was a nice trade. Bang, Thursday, Friday, sold off. I thought this would hold. 114.60, 114.50. I thought in the first test this would hold, but the whole Turkish lira worry seemed to batter the euro as they worry about knock-on effects to banks exposed to the Turkish lira bonds. Anyway, we did pause here for I think 6 or 7 hours if you look at the hourly chart. So it did work as a support level, but only on an intraday basis. And then we broke lower to 113.83. We bounced back to 114.10, but obviously the mid 114 area now is going to be resistance on any recovery. Clearly, it does look like the euro is headed lower. You can see the 200-week moving average at 113.80. No, hang on, that's not right. That was the low of the bar. 113.65. So we bounced just above there. So that will be the level for the bears to beat to continue the bear trend, which has obviously been in place since February of this year. Yeah, it looks pretty negative to me. Fibonacci target of 111.86, that would be the next one. Weekly chart for cable shows us breaking the July low at 129.55, obviously giving us a sell signal. We've been looking to be short this for quite a while, so if you have been running shorts on the back of the report, that's worked pretty nicely. How many days in a row are we down? 1, 2, 3, 4, 5, 6, 7 days in a row. We have been lower, and there's no sign of a reverse of that bear trend at the moment. Strong bear trend. Yes, we're oversold on the daily chart. We're also oversold on the short-term chart, the 4-hour chart, for example. On the weekly chart, not yet, but I don't see any support. I don't see any buy signal. There's no bullish candles even in the short term. So if you're short, it looks like you're on side on that, and it would be worth holding. Euro versus the yen broke the 200-week moving average and collapsed. Now, we have got some support going on here, and we are oversold in the short term. So, well, this is obviously key. 126.80 is your 38.2% fib. Then you've got the 100-week moving average at 126.65, so that's within a 15 pip range. Then you've got this trend line going back to April of 2017, just joined with the low of this candle here down at 124.61. That comes in at around 126.39. So I suppose you've got a 40 pip area of support there, which does seem to have held, even though we overran slightly to 125.98. So that's going to be key. If you're buying longs here in the mid to low 126 area, it's a pretty low risk trade because you're out below 125.90 and you're reversing into a short position looking for a move down probably as far as 124.00 actually. So there's some decent scope on a short if we do break. But of course, if we hold it, we could get a decent bounce back now just to ease the oversold conditions on the daily chart and the short-term chart as you see there. So we could at least push back up to 127.50, 127.90. So risk-reward wise, probably is worth taking along, only if you're prepared to then reverse into a short. Obviously, if we break below the support that I just showed you on the weekly chart. But either way, if we move either up or down from that mid 126 area, there is scope for some decent profit on those trades. Hope that makes sense. The pound continues to be annihilated with all the Brexit talk and talk of no deal and blah, 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 all that rubbish. So once we broke 144.40, 144.20, which was the 100-week moving average and the 38.2% fib, down we went. No surprises there. We even got a chance to sell it, I think, up in that low 144 area. Whenever it was. So yeah, on the break below the 144.46 500-day moving average, we had that bounce up to 144.20.30, topped out at 144.40. So that was a nice trade if you managed to jump on that one if you were reading the pound yen report. and bang, down we go. Still looks negative, no reason to look for a bounce even though we are oversold. So if you're still short, you're probably on side on that one. Canadian dollar found good support at the 100 week moving average. I thought we might just dip as far as 129.40.30, but it wasn't to be. We had support in that whole 129 sort of 70.30 area, which proved well, it certainly worked, didn't it? I don't know if you managed to jump into a long somewhere in that area, but if you did and you managed to ride it up, well done. It turned out to be a good trade. Now we're up through the 55-day moving average and the previous high of 131.19 up to 131.53. Looks strong. Closed right at the high of the week. No reason to suspect that we'll. What I should say is every reason to suspect we will continue higher. Looking for 131.80, 131.90. That will be resistance up there. We've got some fibs up there, as you can see, around the 131.80 area, and we've got the trend line up at 132.00. So this little 20 pip area is going to be resistance. We could turn lower from there. It's not the strongest resistance, but that will be the deciding factor for this week anyway. So if you are selling it up there, certainly take some profit on a long if you are long. If you're selling it there, stop above 132.00 and then reverse back into a long and look for us to trade up to sort of 132.50, 60.